Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, the equity markets, again, every week we're seeing record highs. Just how long can equity mania continue?
I know it is one heck of a wall of worry, and I mean it just keeps on going. And thank God, I'm a technical trader. I follow the trend because the trend has definitely been our friend, and it just keeps on going higher and higher. But the angle of attack that the markets have been climbing, when you look at the SP 500 or the NASDAQ, really since October, I mean it is very steep, and it's very similar to actually what we saw in 2017, from October 2017 till February, more or less. Very similar type of price action, almost the same distance and angle. And it's what's interesting is it's actually happened over the same period of time, October to more or less February. And it's really interesting because a lot of other things come into play, where I was looking at the put-call ratio yesterday, and the average put-call ratio, when you average it out over 2 or 3 day moving average, we're seeing the put-call ratio down at a level that is showing extreme bullishness in the market, meaning everyone is buying calls. There's no downside protection. It is kind of the euphoric blow-off top. This is a very powerful move. It could continue to keep running like this, but you got to know it's going to come to a very violent end. And the last time we saw this, the SPY ETF went from $286 a share down to $253. So a very huge percentage drop, and it happened in only 5 or 6 trading sessions. And the markets are setting up very similar that way again. And the interesting twist about it is what gold miners have done over the last month, even over the last just couple days, is almost step by step exactly what it did back during this time in 2018 and early 2019 when the stock market had this blow off top. So money is shifting and moving into these miners, and I think we're about to see a really sharp correction in equities, and we're going to see a really strong breakout in precious metals, and the gold miner stocks might actually start a new full-fledged bull market and break out.
Now, so often when the equity market goes down, it takes everything down, including the mining shares. Do you see that happening this time?
It can in some situations. I mean, in 2000, we saw mining shares rally, do really well. For example, this exact type of market setup that I'm seeing now that happened in October of 2018 till February of 2019, we've got the same price action. We saw gold miners actually soar and take off as the safe haven play. So I have faith that they're going to take off and become seen as that safe haven play. We'll probably see bonds as well take off. And, you look at the chart of bonds that's had a multi-month consolidation and a beautiful bull flag pattern that points to much higher prices. Gold miners have done the same thing, and they're both gold miners and bonds just last week turned a corner to have an upward trend, an upward bias. So they're just in the infancy stage. They're still chopping around building the final stages of this base, but the momentum is to the upside. So everything is primed and ready here for an equities pullback and for a safe havens to really have a soar and take off as to really kind of hedge people's accounts here.
If gold miners are expected to do well, what about silver?
Silver should follow suit. I think, silver is primed and ready. So are the silver miners. I mean, they're all pretty much in the same boat. Really, when one moves, they're pretty much all moving in terms of silver, gold, and in the miners. So I think they'll do really well. In fact, I like silver and the silver miners the most, kind of longer term for upside potential. But we have been seeing gold miners perform, or physical gold perform really well and break into a bull market. It's leading the way. So at this point, you kind of want to follow gold stocks, I think, until we see silver start to break out. Then I think you could flip your positions from gold miners over to silver miners, or even physical silver, because it'll play catch up and outpace gold. But money is flowing into gold as the global safe haven. So that's kind of where you got to keep your money at this point.
Is this a good time to look at averaging, where you just buy the same dollar amount of gold and silver every month?
I think so. I mean, technically we're in a bull market for gold, and if you haven't been accumulating for a few years, I mean, this is when you want to do it. You want to, the trend is up, so as long as you can save up some money and you put some away, every month, you're trading with the trend, which is the key. It'd be nice to buy down at the bottom, but people don't always have that luxury. You can put a bit away every month, and this is what you want. We're in a bull market. You buy a little bit this month, price goes up, and your assets go up in value, and you add a little bit more, and that's the way really long-term investing is done. It's not usually about plunking your money at one point hoping you're right. It's really that constant stream for long-term investing, of placing it in and averaging in over time.
Well, sure, all the millennials who got into Bitcoin, you had the rush of seeing it go up $200 or $300 a day. That's not a real investment, is it?
Yeah, that's not so much. I mean, yeah, it's not really seen as an investment. It hasn't been around long enough to be considered a long-term investment, really, and something that's going straight up doesn't really scream investment. It screams, speculative and high risk and insanity. But lots of money can be made if you know when to step off the rocket ship.
Right, and what's Bitcoin doing right now?
Bitcoin's had a nice rally this year. It's holding its ground. It's forming a very large bull flag. It looks like it's trying to build a base here. Very much so, kind of like it's a big bull flag that's pointing to higher prices, but I think it still has some more time to be done before it's going to be matured, or before I like a type of setup to get into Bitcoin. I'm not a huge fan of trading Bitcoin. It does move fairly nicely, but you can have these 10% moves in a day with some big players just swinging money around, and it makes it difficult and adds a lot of risk. I mean, the big picture stuff is great, but in terms of short-term trading, I find it very difficult because you can have these wild swings intraday. But I mean, if you're long Bitcoin, it already had its kind of craze a couple of years ago. It's fizzled out. It's gone out of favor. It's now back into a bull market trend, and it's just starting, I think, another leg to the upside. I mean, we called it. You and I talked about this a while ago, that we were looking at $12,000 or $14,000 Bitcoin. This was early last year. And here we are. We've hit those levels. It's flagged out in a beautiful basing formation. It's still working on. And the next level brings us back up to roughly the 18 or 20,000 mark from here. So there's a lot of upside potential, but I mean, it's a totally different really beast to kind of trade, and it's a short-term trader's vehicle, really.
We'll have more with Chris Vermeulen right after the break.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Chris Vermeulen. Chris, is there any action on the bond market?
Yeah, bonds. I really like bonds. I mean, they've been consolidating since August, but it's been a very controlled consolidation, and they kind of bottomed out in November, and then they've been bouncing bottom all through December at that same November low, and they just weren't going any lower. Meanwhile, the stock market is making new all-time highs like every other day. And that to me is a sign that bonds they're oversold. Even though stock market's going higher and everyone is bullish, bonds just don't seem to fall. So to me, when something is oversold and everything is going against it but it's not going down, that to me is actually a sign of strength. And over the last about 3 weeks here, we've been seeing this momentum shift in bonds to the upside. Today we've got a beautiful pop in bonds. It's on the verge of breaking out. I think this week could be a real big week for bonds in terms of it really confirming and closing above the recent highs over the last couple of weeks to be a new uptrend. And I think it's going to be a really strong play going forward here. I think bonds are going to spike. They're going to go really quick, a lot like we saw last August, where they just rocketed straight higher for a few weeks, and then they fizzled back out. But that's the way the market moves. We're going to have a sharp correction, I think, in equities, a sharp pop in safe havens like bonds and metals, and it's going to be a trader's market here. There's going to be big moves, really volatile January, February, I think, coming up.
We'll have more with Chris Vermeulen right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, what's happening with natural gas?
Yeah, natural gas has been on the radar for a couple months. Every time you and I talk, we talk about how I'm looking for a bottom in natural gas, and it has yet to find a bottom. It just keeps sliding away. And last week on Friday, it closed around the $2 mark, which is an August low. It's a whole number, meaning there's a lot of people saying, hey, if it hits $2, I'm going to buy it. If it breaks below $200, there's going to be all the people who are long saying, get me out. They're going to have their stops triggered. They're going to panic out of the play. And that, to me, is what I think is happening this week. We got below $2. We're seeing big volume, the market gap lower, and it's selling off in a fairly substantial way. Today, it's down 6.3%. So it looks like it's a panic sell-off in natural gas, which usually signals a bottom. So I'm thinking a couple of weeks from now, or even a week from now, we should probably see natural gas trading quite a bit higher as everyone panics out at the low, and then they chase prices back up as it takes off to the upside. So I like natural gas here. This is the first time I've really liked it, just because it's at an ultra extreme low, and we're seeing panic selling in it, and it's broken some critical support zones that force people to panic and stops to be triggered.
Crude oil still hanging in there?
Yeah, it's hanging in there by a thread. I mean, it's been a wild ride the last 12 months for it. It's been up to this $62 per barrel a few times, and this is the third time it's hit. The other two times it's sold off about 18%, and it is in a bearish pattern. And it moved higher in overnight trading last night, but it's getting sold back down again today for what looks to be a reversal type bar. So it looks like crude is on its way back down to that $52 per barrel level. Currently it's at 58. So there's quite a bit of room for it to slide. It's a little ugly chart though to trade in terms of the pattern and the speed that it's moved. It's moved really far, really quickly, and it kind of needs to consolidate, build some energy, or take a breather before it keeps going. I find it a very hard play here to try to take advantage of falling crude because it's oversold, and at any point we could get a really strong bounce. So unless we get some type of pattern that, lets the market kind of cool down for a little bit, it forms a bearish formation, that would be when I'm interested in getting into an inverse fund to take advantage of the next leg down.
Chris, how would you sum up the markets right now then?
Well, if you're a short-term trader, I'd be ratcheting up your stops in the SP5 or whatever stock index you're long. I think it's going to have a very sharp correction. I think it could be something where we see multiple percentages day after day to the downside. So if you've got stops that are trailing way down there, I think it's a good time to be moving them up to almost choke out your trade. As soon as we have some weakness, you see the market, you'll get stopped out, lock in your gains. And I think you got to be looking at some safe haven plays. Like I think bonds are going to be a great play, and gold miners going forward here.
Chris, thank you so much for chatting with us.
Hey, thanks for having me on the show, Jim.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howestreet.com. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.